Welcome to Markets Now. I'm Michelle Rourke with Kent Beadle of Paradigm Futures, and we're seeing grains mostly lower, except for a few corn contracts this morning. Livestock futures started off mixed in the hogs, but we're gaining a little momentum there. Cattle to the plus side. And Kent, let's start off talking about the grains. First, we had a down day and everything yesterday. We've kind of run up into some chart resistance here. In especially the soybeans right now, right?
By May contract specifically, running into the 200-day moving average. That 200-day is kind of an important one for some of the larger long only, hedge funds. They like to buy. They're trend followers, and they like to buy when prices are above that 200-day. And soybeans have been very reluctant to get above that level. We've seen a lot of selling against that on previous rallies as well, and we saw that again here yesterday on early spring.
Yeah, but you've seen corn run up into resistance as well, up at that 62% retracement level. So can we get through that? We had a little export business to push us this morning anyway.
Trying, but we're finding some sellers again. Keep in mind that this is the time period in which, we're both finishing up the Goldman roll that usually ends today, as well as we're running into that time period when growers are needing to price May basis contracts. And so, with the rally that we've had, I think it's stimulated some of that pricing, and that's allowed us to see some pressure here, both yesterday and here early this morning.
Right. Let's talk about the other factor that has been kind of holding back the grains, especially the wheat market, and that happens to be the weather, right?
What we have is, a little bit slower progress than the trade was expecting on yesterday afternoon, but it's still very, very early. We look to have maybe an open 2 or 3 days for a good portion of the Corn Belt. I think that we'll probably maintain our average pace this week. That might get us up toward 10% here this coming Monday, but it does look wet for the weekend, especially in the Eastern Corn Belt.
Right, but it also looks wet in the wheat areas too, right?
The amounts are still up for debate. This morning, I think the maps turned a little bit wetter, and that wetter look to them probably had the Kansas City contract down a little bit more than Chicago overnight. The wetness for wheat could be a problem for these soft red winter wheat areas that have already experienced some excess rainfall and some localized flooding. We did not see that show up on the crop condition rating. We did see Arkansas down 3 points, but the other states that we thought might be impacted by flooding really didn't seem to be impacted much at all. So it'll be very interesting to see what happens if they get a lot of rainfall this week.
But do you expect more export business here now that we have this 90-day pause? I mean, we've seen some flash sales the last couple of days.
With the 90-day pause that is going to keep any retaliation at bay, that takes us out into July and toward the very end of our marketing year. I don't think we're going to see much in the way of impact, at least for old crop. And we do have to keep in mind that based on yesterday's inspections reports, corn is still over 30% ahead of a year ago. The new export estimate is up about 11%. Beans are nearly 11% higher than a year ago, and USDA expects bean exports to be up about 7.7%. So we're still running both commodities ahead of the USDA estimate, and especially with corn, I tend to believe that we're going to have to see the USDA increase exports again and lower that ending stocks number once more.
And I think there's hope by the trade, Kent, that we are going to get some of these deals worked out. I mean, the administration says that we have 70 out of the 130 countries that we have been talking to anyways. The one caveat is just China.
This is an escalation, and mine is bigger than yours sort of response by the countries, but it sets the table for an outcome that almost requires a negotiation. And I think that one will be forthcoming. It's just a question of getting past all of the optics. China says they want respect. Well, nobody wants to lose face, and that's a big part of Eastern culture. And so, if the Trump administration wants to say some nice things, we can get a negotiation probably started.
Let's talk about the cattle market. We've had a good recovery there along with the stock market. Even though cash trade was lower last week, we still have futures at a discount. Can that market keep going? Can that momentum keep going here? Can we keep the funds interested in that market as long as the stock market is recovering?
The underlying fundamentals suggest that those things are possible. That's why we are at $200 in the June contract. I think as long as we don't do any major technical damage to the cattle, and if the stock market starts pricing in negotiated settlements as opposed to just ongoing tariff wars, we got a good chance to keep the cattle rally going.
Thanks so much for joining us, Kent Vita with Paradigm Futures. Remember, futures and options do have substantial risk, and this is Markets Now.